freedom, it's the word we raise in protest banners. We defend in constitutions. We believe is our birthright. But what if the freedom we cherish is only surface deep? What if another kind of power quietly replaced it long ago, one that doesn't march in tanks, doesn't open fire with guns, yet it rules just as ruthlessly? What if a silent coup took place, one that didn't steal our ballots but our money, didn't shackle our limbs but our wallets, and replaced freedom with financial control? Today, we peel back the layers of history and power to ask, how did a system designed to liberate markets end up controlling us? And why does the illusion of freedom persist when the rules of money and power have already changed? In this video, we'll trace the hidden architecture of money, the shift from democratic promise to control by credit and debt, the moments when freedom surrendered to finance in, the consequences that echo into our lives today. Stay with us. To understand how freedom was replaced by financial control, we must begin at the very idea of money. Because money is more than currency, it is power, promise, and sometimes betrayal. In the earliest days, human societies traded not just goods but trust. Farmers exchanged grain, neighbors helped neighbors. Communities functioned because value was anchored in labor, land, and reputation. Then came coins and later paper currencies. Suddenly, value could be abstracted, stored, transferred, and controlled. The promise of freedom was clear: free markets, free individuals, choice. But choice depends on power, and power is always hungry. So the stage is set. On one side, the ideal of freedom. On the other, the apparatus of money. Over time, that apparatus changed hands, grew invisible, and tightened its grip not with swords, but with ledgers, rates, and interest. In the chapters ahead, we'll see how the roots of that shift stretch back centuries, how the rise of credit turned into the rise of control. We'll meet key actors, kings, bankers, central banks, and we'll follow the cause and effect chain of how the tools of economic liberty became the mechanisms of new constraint. Our story begins with the first rulers who discovered a simple truth. If you control the money, you control much of society. In Mesopotamia, over 4,000 years ago, temples recorded loans, grain obligations, and debts in clay tablets. Money in those days was often grain, barley, or silver, weights closely tied to the physical world. The rulers had to compete with nature and harvests. But as the system matured, something subtle changed. The abstraction of value. A farmer would borrow seed, promise repayment, plus a little extra, the earliest interest. The moment debt entered the system, the power dynamic shifted. The borrower was bound. The lender was elevated. Fast forward to medieval Europe. Kings minted coins, claimed the sole right to produce money, and taxed people in the currency they controlled. The so-called sovereign right of coinage cemented money as a tool of state power. Another shift. The rise of banking and private credit. Money ceased to be just the king's. Coin became credit, promises, internal ledgers. It moved away from the farmer's plow and into the palace and the bank vault. In the origins of control, we see three key cause and effect chains. Control of money production gives control of society. Debt becomes the lever of power. Monopoly of currency production by states gives removal of alternative freedoms. In these roots, we see the first quiet coup, not overthrow of government, but takeover of money. And so begins the journey from freedom to financial constraint. As monarchies grew, so did the machinery of money. To wage wars, build infrastructure, and maintain courts, states borrowed. Initially, they borrowed from merchants. Later, they issued bonds, and eventually they built centralized banks. In the 17th and 18th centuries, armies marched empires, expanded, and behind them followed vast credit networks. The rulers of the age didn't just rule with swords, they ruled with ledgers. Debt was now a systemic tool of state expansion. In return, the citizenry gained infrastructure, commerce, and modernity boute, also obligation. What once seemed voluntary trade, growth became tied to overarching debt structures. By the 19th century, the mechanism of money expanded further. Paper money, central banking, state-controlled currency, the state and money became entangled. The architecture of financial control. When money becomes a claim on the future, when a government issues bonds based on expected taxes, freedom begins to shift. The future now owes, citizens owe, the state controls. In these times of rise, we see the cause and effect chain. expansion of credit, growth of state obligations, dependency. Control of money supply gives ability to influence industry, individuals, markets. Debt structures built into society gives limitation of freedom through financial frameworks. Freedom remained a rhetoric, but the arrangements changed. The silent coup advanced not by revolution in the streets, but by revolution in the vaults. Every system carries contradictions. A money system built on expanding credit and control inevitably reaches a breaking point. When the tools of control become the very cause of crisis, freedom is less than ever. In the early 20th century, we saw that break. Financial bubbles burst. The state intervened. Control mechanisms multiplied. Money supply was manipulated. Governments became lenders, regulators, and supervisors all at once. Crucially, during these breaking points, freedom suffers. In the Great Depression, for example, governments imposed controls, suspended gold convertibility, regulated banks, intervened deeply in economies. The promise of free markets gave way to managed systems. Smaller scale, in the 1960s-80s, financial repression became a tool of governments to manage debt. Policy measures such as low interest rates, capital controls, forced holding of government debt in state-controlled banks all limited individual financial freedom. Crisis triggers intervention, gives control, expands. Intervention mechanisms become permanent, gives freedom, recedes. The breaking point is not only economic hit, is institutional. Freedoms trade places with constraints. Here the silent coup does its deep work. The currency, the credit system, and the state converge, and the individual becomes subject to the apparatus of finance. The lines between public freedom and private control blur, and the system rumbles on. After the breaking point comes, the fallout and a new normal is established. In the decades following the mid-20th century, we saw the rise of sophisticated financial control systems. Central banks with vast powers, national currencies detached from gold, and credit extended to virtually every corner of society. The shift from commodity-backed money to fiat money gave states and banks unprecedented control. As one central bank site put it, governments have a great power that no one else in the economy has the ability to print money. This power, however, brings with it a dangerous temptation. Federal Reserve Bank of St. Louis, freedom, defined as autonomy over one's financial life, became constrained in subtle ways. Debt burdens, interest payments, credit scores, surveillance of transactions, monetary policy that shifts at the push of a button. Consider the cause and effect here. Fiat money gives unrestricted money. Creation gives inflation or asset bubbles. To manage instability gives increased regulation, intervention, surveillance. These tools become entrenched, gives individual financial freedom, is shaped by institutional mechanisms rather than market choices. In the fallout, we see the silent coup complete much of its work. Freedom remains as a concept, but the economic terrain is controlled. Citizens live in a system where every transaction, every credit decision, every monetary policy affects their real freedom, and the terrain of freedom is narrower than the rhetoric suggests. In times of crisis, we often see efforts to restore freedom to return to a system where markets are free, states are limited, individuals are empowered. Yet many of these fixes fail, or worse, they reinforce control. In 1971, the U.S. ended gold convertibility of the dollar, abandoning a fixed anchor and embracing pure fiat. The motive was flexibility, but the effect was to deepen monetary control, not reduce it. In the 1980s and 90s, deregulation was supposed to liberate markets. Instead, it consolidated power in large financial institutions, made banking too big to fail, and ushered in global asset bubbles. After the 2008 crisis, the public expected meaningful reform. Instead, we got bailouts, subsidies, ever greater state bank, entanglement. The system did not become freer, it became more centralized and opaque. The pattern is clear. Attempts to free the system often become mechanisms of deeper control. A cause-and-effect chain becomes crisis, reform, consolidation of power. Reform promises freedom, gives reality, delivers structured control. This is the paradox of the silent coup. The more freedom is promised, the more control is built in. Faith in markets becomes faith in institutions that regulate them, and individual financial freedom becomes managed freedom. At this point, the coup is not just silent, it is invisible. It is no longer about tanks and revolts. It is about credit scores and interest rates. Now we arrive at the present end. It is here we see the silent coups reach more clearly than ever. Debt levels, global debt has soared. Nations borrow, households borrow, corporations borrow. Debt isn't just a consequence, it's the mechanism. Digital control. Central banks are developing central bank digital currencies. These promise convenience, but also programmability, controlling when, how, and where money is spent. Surveillance. Every transaction is tracked. Every credit application logged. Every digital wallet monitored. Freedom of action in finances is conditioned by digital infrastructure. Wealth inequality. A few accumulate vast power. The many remain indebted. As one commentator put it, private wealth, led by private bankers, began to wrest control of the monetary system away from the regulatory democracy of governments. Policy tools like financial repression, remaining use the government's channel private savings into public debt, suppress savers' returns, and regulate capital flows to their advantage. Let's map the cause and effect in our modern world. Digital money and debt frameworks gives individuals dependent on credit and institutions. Debt dependency, reduced financial autonomy, increased control. Monitoring and programmability of money gives ability to shape behavior and limit freedom. Wealth concentration gives fewer individuals controlling the system, gives freedom for many, becomes conditional. The coup is no longer silent, it is systemic. But because it happens through credit markets, central banks and legislation rather than tanks, it remains largely invisible. Yet its effects are potent. The freedom promised becomes freedom managed. The individual becomes creditworthy rather than autonomous. And the architecture of financial control becomes the infrastructure of society to bring the magnitude of this change into focus. Let's look at some startling figures. In many advanced economies, public debt to GDP ratios have topped 100% and continue rising. Since the abandonment of gold in the 1970s, major currencies have lost over 95% of their purchasing power in real terms. The top 1% now control more wealth globally than the bottom 90%. The control of money translates into control of society. Central bank balance sheets have exploded. The ability to print and direct money has expanded dramatically. These are not isolated statistics, they are patterns repeating. A shift to fiat money, expansion of debt, crises, consolidation of control. Freedom in this architecture becomes the condition of being permitted to participate in the system, not the power to opt out. And opting out isn't just hard, it's costly. The silent coup's blueprint is embedded in these numbers. And unless we recognize it, we are living inside its design without knowing it. As we draw the story together, here are 3 clear lessons we must carry with us. Freedom and money are inseparable, but money gone wrong can replace freedom with control. When money is anchored in trust, autonomy thrives. When money becomes debt, promising control, freedom shrinks. Control mechanisms in finance often masquerade as reforms for freedom. Bailouts, central banking, digital currencies, they are sold as stability, efficiency, convenience. But beneath them are power shifts, not liberation. Awareness is the first step toward reclaiming autonomy. We cannot fight what we cannot see. If the architecture of financial control is hidden, the only path to freedom is understanding the system, its design, and its logic. These are not just intellectual abstractions, they are lived realities. Your financial life is part of this architecture. Your savings, credit, taxes, and currency choices all feed into the system of control or freedom. The choice rests not just in law, but in the structure of money itself. The silent coup is far from over. As digital currencies rise, surveillance tools deepen, and debt frameworks expand, freedom remains under silent siege. The warning is simple. If we do not question the architecture of money, we will become subject to systems we barely understand, and freedoms we believe we hold may already have been surrendered. But there is an open-ended thought. Perhaps freedom never meant independence from systems, but autonomy within them. Perhaps the question isn't how to escape money, but how to shape money so that it serves freedom rather than replaces it. The next coup may not arrive with a bang but with a button press. Will we be ready? If this story has made you think differently about money, power, and freedom, share it with someone who needs to hear it. Comment below. What part of the financial architecture surprised you most? Subscribe and hit the notification bell for more deep investigations into history, money, and the forces shaping our world. Because the next silent shift might already be underway into awareness is our first line of defense. Fade out, music lingers, the screen goes dark, then channel logo appears.